Welcome to the deep dive. Today we're jumping into the latest results from Wonderla Holidays Limited, India's big name in amusement parks. We'll be looking at their Q1 FY26 performance,
Mhm.
digging into what's happening operationally and sort of seeing where they're headed strategically. And just so you know, all this info, it's straight from their Q1 earnings call, the official results, press releases, their investor decks. So yeah, it's
Yeah,
direct from them.
exactly. And our goal here isn't just to list the numbers. We really want to figure out why this quarter matters, not just for Wonderla, but for the whole leisure scene, and what it means for you if you're interested in business strategy or how consumers are behaving these days.
Okay, so let's get right into it. The headline numbers for Q1 FY26 compared to last year. Q1 FY25. Total income. It was up, but really only marginally, like 1%, reaching 17,906 lakhs. That's about 179 crore rupees.
Right, a tiny nudge up there.
But then revenue from operations, that actually dipped slightly, about 3% year on year.
Hmm.
It landed at 16,824.37 lakhs. And EBITDA, including their other income, was 8,750 lakhs. Now that's down 9% compared to last year.
Which brought the margin down too, right?
Yeah, exactly. The EBITDA margin is now 49%, down from 54% last year. So a noticeable drop there.
Okay.
And finally, profit after tax, PT. That saw a bigger hit, down 17% year on year to 5,257 lakhs, which means the PT margin fell from 36% last year to 29% this quarter. So, yeah, kind of a mixed picture to start us off.
It really is. And, what's quite revealing is how they broke down that EBITDA reduction. If you strip out the other income, it was about a 14 crore drop. And they gave some specifics on why.
Oh, interesting. What did they say?
Well, about 31% of that drop they attributed to lower footfall. Fewer people coming in, makes sense.
Okay.
But, and this is a kicker, 45% of that reduction was actually due to more spending on marketing.
45%? Wow, that's almost half the drop coming from spending more, not just earning less.
Exactly. It suggests, a very conscious decision to invest more heavily in marketing, perhaps to counter the trend or push something new. It wasn't just things going wrong.
That's a really key insight. Not just reacting, but actively investing. What about the rest?
The remaining 23% was just the net effect of all other bits and pieces, expenses and such.
Got it. So that marketing spend is definitely something to watch. But thinking about their overall financial health, wasn't there something about other income?
Yes, good point. Their other income actually jumped quite a bit, up to 1,081.79 lakhs, and that was mostly from interest they earned on fixed deposits and some investment gains.
Ah, so that helped cushion the blow from the operational side then.
Precisely. It offset some of those declines, showing they've got some, financial buffers working for them from their cash reserves.
Right. So the core park business might have stumbled a bit,
Mhm.
but the overall company has other levers.
Absolutely. But yeah, let's talk about that core business, the visitors, the footfall.
Right, the footfall roller coaster, as you might call it. The total number of visitors this quarter was 9.17 lakhs. That's down 8% compared to Q1 last year, which had just over 10 lakhs. So, yeah, fewer people came through the gates overall.
An 8% drop is fairly significant. How did that break down across their different parks?
Okay, so for Q1 this year, Bengaluru saw 3.22 lakhs visitors, which was down 10%. Kochi had 2.37 lakhs, down 14%, so bigger drop there. Hyderabad was at 2.62 lakhs, down 13%, also quite a dip,
So the established parks also had double-digit declines.
pretty much. But then there's Bhubaneswar. It's the newer park, right? Only started operations in May last year. It actually showed growth. It had 0.96 lakhs visitors compared to 0.70 lakhs in Q1 FY25. So that one's ramping up.
Okay, so growth in the new park, but declines elsewhere. What reasons did the company give for those drops in the established parks? Was it just, a bad quarter?
They pointed to what they called unforeseen circumstances, especially hitting them in the second half of the quarter.
Unforeseen? Like what specifically?
Well, they mentioned an early monsoon hitting harder or sooner than expected.
Ah, weather. Always a risk for outdoor entertainment.
Definitely. They actually said adverse weather can slash daily footfalls by 30–40%. That's huge.
Wow, okay.
And they also used this phrase, broader warfare, which seemed to imply kind of wider geopolitical tensions or maybe economic uncertainty affecting how people felt about spending on entertainment.
Broader warfare. That's quite a term to use on an earnings call. Did they elaborate on what exactly they meant or how it directly impacted theme park visits?
Not in great detail in the summary, no. It felt more like a general comment on the overall consumer mood, maybe reflecting a sense that people were being more cautious with discretionary spending because of wider global events or economic headwinds.
Right. It's something you hear companies mention sometimes, linking performance to these big external factors. Hard to quantify the direct impact, but it sets a context.
Exactly. And they also noted that Q1 isn't big for group bookings like school trips anyway. That's more of a Q3 thing for them.
Okay, so primarily weather and maybe some general consumer caution hitting the established parks.
Yeah, seems to be the main explanation. But here's where it gets really interesting.
Go on.
Despite fewer people coming, they actually made more money per person.
Ah, the ARPU, average revenue per user.
Exactly. Their ARPU went up by 6% year on year, reaching 1,775 per visitor.
Okay, so how did they manage that? Was it just ticket prices?
Well, ticket prices were part of it. The average ticket price, or ATP, increased by 4% to 1,281. But the really impressive bit was the non-ticket spending, what they call sales per head, or SPH.
Right, so food, merchandise, photos, maybe the resort stays.
Exactly. That SPH grew by a strong 11% compared to last year, hitting 493 per person.
An 11% jump in in-park spending per head, that's significant. It really shows they're managing to get visitors to open their wallets more once they're inside.
Totally. And it connects to their bigger strategy, doesn't it?
It absolutely does. This focus on non-ticket revenue is huge for them. Food and beverage is the main driver there, but retail and the resorts contribute too. They've mentioned this long-term goal, of shifting the balance. They want to get towards a 60-40 split between ticket and non-ticket revenue eventually.
60 non-ticket, 40 ticket. Wow, that's a big shift from the traditional model.
It is. It means really maximizing that in-park experience and spend. And they attributed this quarter's growth in SPH to things like their digital marketing driving engagement, better operations, and focusing on guest experience. They even mentioned seeing improvements in their Net Promoter Scores, the NPS, which suggests customers are happier too.
And they gave some tangible examples. They ran these mind-blowing summer campaigns, which apparently did well. They highlighted big growth in online bookings, which ties into that digital strategy.
Makes sense. Easier booking, maybe better deals online.
Yeah. And lots of new food options. They listed things like Momo Mania, Hyderabadi biryani buckets, chips in a bag, Rolito, and Amras Festival, even Bobi teas.
Okay, they're definitely trying to spice up the F&B offerings.
Seems like it. Oh, and they also mentioned concerts. Apparently those are more about marketing buzz than direct profit.
Right, draw people in, create an atmosphere, build the brand. It all feeds into that strategy. Get them in, make sure they have a great time, and encourage them to spend a bit more while they're there.
It's a smart way to counter fewer feet through the door.
And speaking of new experiences, they launched something called the Isle, didn't they?
They did, yeah. Just opened in June, right next to the Bengaluru Park.
Tell us about that. It sounds different from their usual parks.
It is. They're calling it a boutique luxury resort experience. It's on about 4.5 acres, only 39 rooms, or keys, as they say in the industry. Think private pool cottages, glamping tents, very nature-focused, upscale vibe. They invested about 39 crores in it.
39 crores for 39 rooms. Sounds quite high-end. How's it doing so far?
Apparently really well. Management said the initial response was above expectations.
Yeah, they're seeing occupancy around 60-70%, which was better than the 60% they'd hoped for. And the average room rate, the AR, is apparently almost double what they get at their older resort.
Double the room rate. Wow. Is it profitable yet?
They said it is profitable at the operating level, but after you factor in depreciation, it's currently showing a slight loss. Still very early days, though.
Right. Depreciation hits hard on new assets initially.
Exactly. They're framing it as an experiment, but it clearly aligns with that global trend towards more experiential, integrated leisure destinations. It's diversifying their offering beyond just the theme park rides.
An experiment that's already beating expectations and commanding premium rates? Seems like a promising direction.
I'd agree. It taps into a different market segment.
Okay, so that's diversifying the type of experience. But they're also building a whole new park, right, in Chennai.
That's the big one, yes. The Chennai park is apparently moving along rapidly. They confirmed it's on schedule to start operations by December 2025.
December this year. That's quite soon.
Well, a soft opening in December 2025 is the plan. The full big launch they're targeting for April, May 2026, just in time for the peak summer season next year.
Ah, okay. Soft open, then full launch. Makes sense. How much is that costing?
It's a big project. They've already spent 480 crores on it, and they expect to spend another 120 to 150 crores to get it finished. So, yeah, a major investment.
Roughly 600 crore total then. That's significant. And didn't they mention something about taxes in Chennai?
Yes, a key point. They've secured a 10-year local body tax, or LBT, exemption for the Chennai park.
10 years tax-free. That must be a huge help.
It's massive. Think about the impact on profitability, especially in those crucial first few years. It effectively lowers their running costs and their break-even point significantly compared to operating without that exemption. It gives them a real leg up.
Definitely changes the economics for that specific park. So Chennai is coming soon. Are they looking even further ahead? Any other new locations on the radar?
Yes, they are. They confirmed they're actively exploring setting up parks in other regions. They mentioned being in advanced discussions for 2 specific locations. One is with the Haryana government, likely for the NCR region around Delhi.
Okay, NCR would be a big market.
Huge. And the other is with Uttar Pradesh, specifically looking at Noida. So clearly targeting major population centers.
But setting up these massive parks can't be easy in India.
Yeah.
Right. What are the big challenges they face?
Yeah, they talked about that. Management was quite candid, saying the amusement park sector is not really recognized as an industry yet in India.
What does that mean in practical terms?
It means hurdles. Big ones are acquiring large enough parcels of land, navigating all the government clearances and permits, which can be complex and slow.
Right, the infamous red tape.
Could be, yeah. And also sourcing high-quality, safe rides is another challenge they mentioned.
But are things getting any easier?
There are positive signs. They noted that states keen on boosting tourism are starting to see the value in having good amusement parks. This is apparently helping them secure land at more reasonable prices and maybe smoothing out some of the approval processes. So a gradual improvement, perhaps?
Okay. And what about the elephant in the room? Or maybe the mouse? Any talk about Disneyland coming to India? Does Wonderla see that as a threat?
Yeah, they addressed that directly. The management view is that it's highly unlikely Disney will set up shop in India anytime soon, like not in the next 5, maybe even 10 years.
Why not? Seems like a huge potential market.
The sheer cost. A Disney park costs billions of dollars. They quoted figures like $3 to $7 billion per park. Compare that to Wonderla's parks, which cost around 500 to 700 crores. The investment scale is just vastly different. They don't think the Indian market can support that kind of Disney-level investment and pricing right now.
So Wonderla feels they're operating in a different space, not really direct competitors in the near term?
Exactly. They're focused on building for the Indian market at a price point and scale that works here.
Makes sense. So looking ahead, with all this spending on Chennai, marketing, and the new resort,
Yeah.
what's the outlook for their profit margins? And what about growth at the parks they already have?
They expect margins to stay under a bit of pressure for probably another year, while Chennai is still being built out and they continue the marketing push. But they see margins improving once Chennai is fully up and running and contributing properly, maybe from the second half of FY26 or early FY27.
Okay, so short-term pain for longer-term gain, potentially.
That seems to be the strategy. For the existing parks, Bengaluru, Kochi, Hyderabad, they're projecting low single-digit growth in footfall. So steady but not spectacular growth expected there.
And are they still investing in those older parks?
Oh yeah, definitely. They plan to spend about 10 crores per park on smaller new rides and attractions to keep things fresh. And Bengaluru is getting a big new addition, a 20-crore roller coaster.
20 crores on one ride.
Yeah, that's a significant investment. And they also do this clever thing where they sometimes move existing rides between their parks. Creates buzz, makes an older ride feel new in a different location.
Smart way to refresh the experience without buying entirely new rides every time.
Very much so. So overall, you get the sense the company is really quite bullish on this whole sector in India. They have clear plans for growth, and they seem to be executing on them pretty methodically.
Right. It feels like a coherent strategy, even with the dip this quarter.
I'd agree. Despite the headwinds, they seem confident in their long-term path.
Okay, so let's try and bring this all together. What did we really learn from this deep dive into Wonderla's Q1? It seems like they're facing some external challenges, like maybe cautious consumers and tricky weather, leading to lower footfall in established parks.
Right, but they're actively countering that.
Yeah, by really pushing to get more revenue out of each visitor who does come, especially through food and other in-park spending.
And strategically investing quite heavily in marketing, too.
And at the same time, they're making big bets on the future, diversifying with premium offerings like the Isle Resort.
Which seems to be off to a good start.
And aggressively expanding their park footprint with the massive Chennai project, plus eyeing other major cities like in NCR and Noida.
It shows a clear commitment to growth, despite the industry hurdles in India.
So a company navigating current challenges while building for significant future expansion.
Exactly. Which leads to an interesting thought, perhaps, for you listening. When you see Wonderla blending its traditional amusement parks with this new experiential luxury resort concept, what kind of holistic entertainment destinations do you think we'll see more of in the future? And how else can companies like Wonderla keep innovating to meet those changing desires, moving beyond just the thrills of the rides into something broader?
That's a key question to chew on. How will leisure experiences evolve? Thanks for joining us for this deep dive today. We hope you found it insightful, and we encourage you to keep digging into the topics that capture your interest.